why are we focusing more on commercial properties rather than residential properties? A lot of it has to do with the market and where it's at right now, just opportunity that we see. So we own a portfolio of near 100, over 100 doors made up of either A, small commercial like 8 units, or single family homes, duplexes, quadplexes. We've made millions and millions of dollars with those investments. I'd much rather spend $10 million on one really great asset in one really great place that can afford to hire a as good as it gets management company and as good as it gets team to oversee that asset. What's going on, everybody, and welcome back to another episode of the Real Entrepreneur Podcast. So we had a question on why are we focusing more on commercial properties rather than residential properties, and the answer for that is kind of multifaceted. A lot of it has to do with the market and where it's at right now on both sides. Our goals, our positions, and positions to be able to raise capital, and just opportunity that we see. Residential single family houses, 2 to 4 units, they're good investments. We've done so well with these properties. We own a portfolio of, I don't know the exact number, but near 100, over 100 doors made up of either A, small commercial like 8 units, or single family homes, duplexes, quadplexes, triplex, things like that. And, we've made millions and millions of dollars with those investments over, the last 5 years or so. 2024, yeah. I mean, a lot of these properties we bought starting in 2021. We bought some in 18, 19, 2020, and then also acquired a ton in 2021 and some in 2022. And so these are good. I mean, we made a ton of money on these properties. However, in a market such as Austin or, something similar, which is where we focused a lot of time investing, these properties will not cash flow. Even with some properties that have good interest rates, like we have a single family home in University Hills in Austin, great property. We bought it for $242, I believe it was, back in 2019. At the time, it was probably valued, close to 300-ish. And at the peak of the market, it was probably could have sold it for, I don't know, mid 500s. Right now, maybe 450-ish. So anyways, I mean, that property, we invested $20,000 into it as a down payment. We probably put another 20 into rehabbing the property. So all in like $40,000. But, we've gained, I don't know, $200,000 worth of value. However, it's on paper, right? So we don't get that value unless we sell it or refinance it. But that was a great investment. However, it will never cash flow unless rents just double here in Austin, because the debt on it, even though we have a really good debt payment on it, after 1 month of vacancy, in best case scenario, doing a make ready to the property that costs, $2,500, $3,000 maybe, doing repairs along the way, just maintenance requests along the way, paying a real estate agent a commission for leasing it, paying the property manager, paying the high Austin property taxes, paying the higher now insurance costs, and everything else that goes into it. Then we have to pay a bookkeeper to do the bookkeeping. We have to, file the taxes for the LLC. That has a cost as well. This property will never cash flow unless we own it free and clear, which we're not really interested in doing. We want to utilize leverage, and we want to maximize our investments, and we don't want equity to sit inside properties that could be used elsewhere to grow. So, but we've made a good, good return on it if we sell the property. And so that was something that we wanted to hold on to at the time when the market was going crazy. It was, appreciating 42% year over year. The market was going insane. Now, over the last 18 months, values have depreciated. So I don't want to lose money in my value, and I also don't want to lose money in cash flow. And sure, I hold on to this thing. We hold on to this thing for 10 more years, 20 more years. It'll be worth, who knows, $800,000, whatever the price is, at the time, because it will continue to appreciate. But the question is, what makes more sense? Let's just say we sell the property right now and we're able to get $200,000 out. Do I want to leave it in and gain another $400,000 over the next, 10 to 20 years? So, get a 3x return over, 10 to 20 years, or 3x my money, my equity that's in it. Or do I want to take that money out and go reinvest in an asset that is undervalued right now and will gain that amount of, equity multiple in a much shorter amount of time and provide cash flow? So if the market, was appreciating 20%, 40% like it was back in the time, we'd be buying every single family house that we possibly could. But it's a different market. It's a different buying strategy. That strategy worked really well at that time. But the market has shifted. It's a different game. And I'm not interested in going and getting, maybe 3 to 5% appreciation in a single family home and losing money on cash flow. What we'd rather do is go attack the commercial market right now, which is really struggling, and they're going to have to sell at such discounted prices. Get into a property at a higher cap rate right now while interest rates are higher, and go in, add value to the property, get cash flow, which we would. We wouldn't buy it if it didn't cash flow, but we'd get as good of financing as we could from a mortgage broker and banker to give us 6.5%, 7.5% interest rate, but only buy the property if it still cash flows with that and still gives us a good cash on cash return on that. Then add value to the property by, depending on what type of asset it is, if it's retail, multifamily, add value to it, increase the rents, increase the NOI. And then 2 to 3 years from now, sell it or refinance it at a much lower cap rate. And all that value that we would have gained 10 to 20 years from now with that single family home, we will gain in 2 to 5 years with one of these commercial assets and make money along the way. Also, these assets support us being able to raise capital from investors and still pay investors a good return. If we raise capital for one of these single family homes, the investor would not get a return being paid out to them every single month, quarter, every single year, because they don't cash flow. But they would be paid out at the end, if we sold the asset. So the commercial assets provide a much more attractive opportunity to the investors that we would be raising capital from. They can support a good management team to oversee it. They can support payroll being paid to an asset manager. They can support, the admin and the taxes and the CPA and the bookkeeping that's involved to really keep the books on this property. And after all those expenses, on top of regular operating expenses, they can also afford to pay us and investors a good cash-on-cash return. And as we execute our business plan, pay them a great equity multiple on the back end, whether we sell it, refinance, or whatever we do within 2 to 5 years. So that's the reason. Another reason is to continue to go out and buy single family homes, for example, at scale. You need a really, really good and big team. Let's say if we were buying houses in Louisiana and Florida and Atlanta and Nashville and Denver and in Austin and Dallas and some in Houston and South Florida, you would need a really, really good and big team to oversee all that, because you're dealing with a lot of times. Now, I said this recently. I don't think that any management company is perfect. They all are bad in their own ways. Some are good in ways that others are not, but they're not perfect. And so the ball's going to get dropped somewhere, whether it is leasing, whether it is overpaying for maintenance, whether it is any of it, not charging tenants back, damages to the property that the tenant should be paid for. And so you're really kind of at the mercy of these management companies and whoever your team is to manage this asset appropriately. And if you don't have a really good team, then that zero cash flow that you were planning on getting just turned into extremely negative. And so that's the other thing is I'd much rather spend $10 million on one really great asset in one really great place that can afford to hire a as good as it gets management company and as good as it gets team to oversee that asset, that we can do those things that I mentioned a few minutes ago, and can afford to pay all those expenses, can afford to have a good return to investors and ourselves, can afford to have an asset manager and all those things that I mentioned. When the single family homes can, but you need a great team that is going to be very spread out. And we don't have that team. So I'm looking at it realistically thinking, Matt and I kind of go back and forth on this, and never am I saying that these are bad investments. I just don't think they're great investments for us with what we're looking to go do next, which is to grow and scale. Because what they will do is they'll hold us back and distract us and take capital away from things that could propel us much, much further. It's just weighing it. It's just looking at, here's this opportunity. Which one's better? Okay, then go with this one. And the which one's better decision comes into more than just numbers. It comes into all that stuff that I just talked about. Who's going to operate it? Who's going to manage it? Who are the team members going to be? How is this going to be overseen? Who's going to handle the bookkeeping, the taxes, the et cetera? Because there's more than, just the initial number that you look at the deal that goes into the investment. And so that's the reason why we're looking at the bigger and bigger deals, is because I believe, and I could be wrong, but I believe that these will prove to be much more scalable and profitable investments for us based on all those factors plus more that I just mentioned. And so we're looking for different types of commercial assets. We're looking for probably at least 32 plus unit multifamily in good markets. Here's the other thing too is, we don't just want to go buy 32 units in some random city somewhere. Or in some, bad part of town of some okay city. Let's buy some better assets, let's buy some B-class multifamily in good cities at a good price for us going in that we can come in and add value to, and, 3 to 5x our money in 3 to 5 years. That's a really great investment. And also in those 3 to 5 years will require a lot less effort and headache to oversee the execution of the business plan. Because if you're stuck in this headache over here, overseeing this, headache of an operation based on all these, Frankenstein put together team members, then it is completely distracting you from the other opportunities that could be propelling you forward. So we're looking for a minimum of 32 units multifamily in good markets across the United States. We're staying away from like California, Washington, Oregon, but basically from Texas to Denver to, the East Coast, South Florida. Check out upstate New York. suburbs of Chicago, looking, the east side of the United States, and same markets for 10 to 35,000 square feet retail. And with retail, these, strip malls or things of that nature that have, multi-tenant properties, good locations, good growing area, good rents. And with these would be triple net. So we would pass the expenses back to the tenants. Taxes, insurance, maintenance, utilities, etc., would all be paid for by the tenant. And so going in, the operating expenses are very, very, very minimal. And then same thing on industrial. We're looking heavier into industrial for all those areas that I just mentioned, but about 10,000 square feet at a minimum to, depending on what it is, 100,000 square feet for manufacturing, distribution, warehouses, and also too on the multifamily side, RV parks, mobile home parks, the things that will allow us to make a much greater return, grow and scale without, sucking the life out of us trying to grow and scale a single family portfolio. And so that's the reason behind it, is not that single family investments or 2 to 4 units are not profitable, because they are, and they've done very well for us. But as big and as far as we want to go, unless we have the proper team in place, I don't think it's the best scalable model. And ultimately, it just takes away from growing and scaling through better and more scalable investments. So if you are that team member, please reach out to me and send me your resume so we can speak in any way. My email is alex@trehomes.com. But I would love to speak with you, because that's the key is if we had the proper team in place for that type of portfolio at scale, we would be focusing there a little bit more right now, but we don't. And I don't know if I want to build that team, but I might if you reach out and you're a good fit and you can handle that. And you enjoy it. But otherwise, we're going to focus on the other opportunities that are present that will pay a greater return and also will be easier to grow and scale and manage for us. So that's why we're at where we're at. If we have this podcast again in 2027, I might be telling you something different. The single family market might be appreciating 40% year over year. And then, times change, strategies change. We're just maneuvering, adjusting, shifting, and moving where the opportunities are and how we can make money, and also where we're at within our operations and where we want to go with our goals. So that's the reason behind it. And 2, 3, 4, 5 years from now, strategy is likely going to change. As other outside factors and variables change, we're going to shift and adjust and go where we need to go in order to execute what we're looking to do. So that is the topic for today, but thanks for tuning in. If you have any questions, email them over to info@trehomes.com. If you are interested in investing in any deals with us, please reach out to me and my partner, Matt. You can do that via our website, typekeyrealestate.com. You can reach out to us personally. My email is alex@trehomes.com. Matt's is matt.typekey@gmail.com. Give us a call. We want to invest with you, and we want to do more deals with you. If you have anything at all, a deal to partner on, and you want to send to us or want us to look at it, just reach out, and we'll see you in the next one.